Morning, everybody. It's 10:30 on the dot, so I'd like to welcome you all to this meeting of Nottinghamshire Pension Fund Committee, and a warm welcome to some of the new members of this committee. I hope that you will enjoy our committee. It's a really interesting committee, and you'll have fun, no doubt, and contribute to the future direction of the fund. I'm chairman of the committee, but we'll come to that shortly when we get to the agenda. May I remind you all that the meeting is being broadcast live, and can I ask you to turn your phones off and that kind of stuff, and also use your microphones when speaking, please, so you can be heard in the chamber and out in the big wide world on YouTube. So let's move on then. I'm not going to read any notices about members of the public because we don't have anybody physically in here today, but I hope there's lots of people out there watching online. Item number 1 of the agenda is the appointment of chair and vice chair. So the committee is asked to note the appointment by full council on the 12th of May 2022 of the Councillor Eric Kerry, myself as chairman, and Councillor Mike Introna, welcome Mike, as vice chairman of the Nottinghamshire Pension Fund Committee for the 2022-23 year. I'll move that that's being noted, and I'll ask with the speaker, please.
Thank you, Mr. Chairman. I'd be very happy to second that.
And before we move to the vote, no, it's a noting, so there's no vote. I'd just like to thank Councillor Camilleri for his excellent work as my vice chair last year, and I'm really pleased to see that he's still on the committee, and we'll enjoy his company and his wise words during the future meetings. Thank you very much for that. Thank you. Okay, so that's been noted, and then we also, item number 2 then, the committee is asked to note the membership of the committee for the 22-23 year as set out on the agenda cover sheet. So we see that's the voting Nottinghamshire County Council members, the non-voting members, as per the list. And I do again welcome you all here and look forward to working with you for the benefit of our pensioners and their future pensions. So again, that's a noting, and I'll move that noting.
And I'd like to second that, please,
Mr. Chairman. Thank you very much. Everybody happy with that? Councillor Waters, do you want to make a comment?
Yes, please, Chairman. Thank you, and good luck for the forthcoming year, and Vice Chair. I've been on this committee for nearly a year now, and it is a fantastic committee. I've really enjoyed it. A few months ago, I did speak to a number of people outside the building. Some claim they were members of the Nottinghamshire pension scheme. Furthermore, they claim they had actually put applications in for the vacancies for pensioner representatives, of which we still have 2 vacancies outstanding for over a year. If that is the case, can you disclose to me at a future point or today how many people have actually applied for those vacancies and why they were turned down? And furthermore, what are we actually doing to actively recruit for those 2 vacancies?
Yeah, okay. So, yes, John.
Thank you, Chair. Just to, it's obviously quite difficult to get out to all the members of the fund, but what we have done is we put out an advert to go out with all the pensioner pay slips that went out. I think it was March, inviting people to apply to the fund. To apply to be members of the fund. We actually, and I'm doing this off the top of my head now, Councillor, but I think we had about 2 applicants, and those are being moved forward to being recruited through the process, and that's ongoing.
And I'll just continue that. So before the meeting, I spoke with Joe for an update. That is the case as I understand it. And we are arranging interviews with those applicants, and hopefully they will be successful in their interviews and be welcomed onto the committee. Thank you. Okay, so no need to vote on the noting. So item number 3 is minutes of the last meeting held on the 28th of April. Can I ask ask the committee can approve those minutes, please? I'll move that.
Yeah, I'll second that, please.
Are we all
Mr.
okay
Chairman?
with the minutes? Any comments? Any corrections? I don't see any indication, so thank you very much, and I will sign those later. Item number 4, Joe, can I ask you to confirm any apologies and substitutions, please? Although I do see a new face in the room. Anne.
Thank you. We have an apology from Councillor John Clark today, and he's being substituted by Councillor Callaghan.
Welcome.
We've also had apologies from Councillor Zafran Khan from Nottingham City Council, Councillor David Lloyd from Newark and Sherwood District Council, Sue Reader, the Scheduled Bodies representative, and Alan Woodward, who is one of the trade union representatives.
Thank you very much. Is anybody aware of any other apologies, please? No, I don't see any. Thank you very much. We'll move on to declarations of interest, which is item number 5. Do any members of officers present have any disclosable pecuniary interest, please, to declare? I see no hands, so I'll move on to B. Do any members or officers present have any private interests, either pecuniary or non-pecuniary, to declare, please? Again, I see no indications. Thank you very much. So let's move on to item number 6, the first substantive item on the agenda today, which is our independent advisors report. So I'd like to welcome and introduce William Bourne over there. He's our independent advisor to the new members of the committee. William advises on all things financial, strategic and everything else. After that introduction, William, I don't know if you want to say a few words and then present your report, please.
Okay, thank you very much, Chair. I've acted as independent advisor for this committee since 2015, and I've really got 2 roles. One is that there is a requirement for the committee to take proper advice when making investment decisions, and I fulfil that role for you. And the second is I am here to provide challenge and advice both to officers and to the committee on really almost any financial topic, and I'm very willing to do that, in all circumstances. I write every quarter, as context, I advise 2 other funds. I also act as chair of 2 local pension boards, so I've got kind of some sense of what's going on in the rest of the LGPS. They also, which is quite interesting, cover 4 different pools. I've got a sense of what other pools are doing, as well as LGPS Central. I normally write a paper like the one I'm about to present every quarter, which is for the public part of the meeting. I make some further comments at the bottom of the exempt valuation report, which are usually about managers where it cannot form part of the public agenda.
Okay.
Shall I pause there in case there are any questions about my role before I present?
Would anybody like to ask any questions of William? I'm sure he's very approachable at any time, after the meeting or other time. So, no, William. I think yes. Please move on to your report. Thank you.
Right. Well, I won't go through my paper in detail, but I would like to highlight 3 or 4 points out of it, because there is a great deal going on in the investment world and markets at the moment. The first, inevitably, is inflation. We are at a 40-year high in the West at the moment, but we're probably very close to the peak of inflation. The real question, I think, is now how much is it going to come down? If it comes down to 2 or 3%, that's probably quite good for financial markets. If, which I think is more likely, it only comes down to 4 or 5, that kind of 5%, that kind of level, then it's probably negative for financial markets. Second comment is about growth. We all tend to fixate on what's happening in the West and America, but actually I think the really important thing to look at the moment is China, because China has been responsible for something like 75% of the world's growth over the last 10 years. And China today is in very low growth mode. We're going to see no more than 3 or 4% growth out of China this year. Historically, they've been having rates of 6, 8, 10%. So I think we can expect low growth in the world, certainly for the next year or 2. The third point I just want to touch on is valuations. And we've all seen equity markets fall over the last 6 months or so. That has been very largely about a fall in valuations, not about a fall in earnings. And particularly in tech, you know, there's lots of headlines how the big tech companies, the prices have halved or even worse than that. But actually, tech is not going away. It's going to carry on being part of our world, and it's going to deliver good earnings growth in aggregate. There will be companies whose model gets overtaken by competitors or who have earnings disappointments, but in aggregate, earnings growth will carry on in tech. So what has happened has been that investors have chosen to put a lower valuation on those earnings, and that's what's happened to markets. It all adds up, I'm afraid, to an era of probably of lower growth, or probably very low growth, and rather higher inflation than we've had over the last 20 years. And you know, nothing is certain. You may find that central banks change course and decide not to raise rates further, and that helps the Western economies just to recover a little bit. But my best guess is that my best estimate is that we're going to get a period of pretty low growth and rather higher than we like inflation. Now, just add on to that geopolitical issues. I think what's becoming clear in the war in Ukraine is that the biggest impact on the world is going to be, first of all, on energy, and second, on food. They're not separate because energy is a major input into fertilizer, which is needed to kind of feed the planet. But they are different in one important respect. There's plenty of energy in the world. We've just got to find a way of getting it to the right place in the right form. Food, there's a shortage. And that's why I think the major instability is likely to come on the geopolitical front over the next 3-5 years. Now, I make further comments in my exempt report about what we at the fund should do. I probably better to kind of pause here and just where we talk about I suppose the major point I'm going to make there is that I think it's 5 years since we had a major strategic review, and I think next time we actually look at our forward strategy going forward, we should actually do quite a root and branch review of where we are. And a couple of points I'd make on that. One is that for many years, bond yields have yielded very little indeed, and it's not true to say they've been uninvestable, but the return they deliver has been too little for the risk they represent. That is changing. For example, you can buy, I'm not saying you should buy, but you can buy bonds which call themselves investment grade and yield 4.5%, almost 5%. And I think that makes them kind of at least worth considering investing in. And the second point is that my experience says that when you get such an uncertain world, you don't want to make decisions quickly. And that's why I don't recommend any changes at the moment. I just think we should have a really good look at the Working Party next January and consider whether we want to change our investment strategy or not. And it could be either. Okay. I'll stop there and pause for questions.
Yes, thank you, Willem. Obviously, the volatility haven't been seen like this for a long time, so and many people will not have experienced the kind of stuff that I experienced on inflation in the 70s, and you know, a lot of younger people who wouldn't even know what it was like in those days. It was tough. Your comment about visiting the investment strategy and asset allocation in January, as you normally do, all I would say is that should things develop and should things become clearer, we'll be very happy to do a working group at any time in the future, really, rather than just, you know, but again, we'd take advice on that, so that if there is anything we can do, if anything to change the allocations, that we would want to do that.
I mean, thank you very much. I think that's very helpful. I suspect it won't, and the big change which could happen is central banks could change course.
Yeah, thank you. Okay, are there any other questions or comments for William, please? Gordon.
Yeah, just a general point. I just wonder whether you've got any comments on Rpi and Cpi over the next few years and its effect on increases in pensions.
Yeah, okay, interesting question. And you know, as I kind of said, I think we're probably seeing the peak in inflation. It will come down. But that doesn't, you know, you could see inflation staying at 5% or higher. The effect on pensions in theory, there is a link, as you know, for the LGPS pension has a link to CPI. But there are some, it's quite possible the government might, as it has in the past, decide to break that link. So I don't think we can guarantee that the pensions which our pensioners receive will necessarily go up by CPI in the long term. I mean, particularly when you have RPI at 11%, CPI at 10%, and it won't be that by September, I don't think. The government might choose to find some way of kind of slightly reducing that. Does that answer your question?
Well, we really only got till September before that decision, because I think most pension schemes are based on RPI and CPI in September. I'm not sure about this council pension scheme. So it depends on the rate by September, which is what, a couple of months away. Yeah. So do you really see that the government will break that? I mean, I think we're looking at, 5, 6, 7% increase on pensioners' income. They might need that. That's to keep up with inflation these days. But it's a pretty short time for the government to break that. I think this pension fund will be committed in September to paying probably the biggest increase it's paid to its pensioners for many, many years. And I just think, what's the short-term view?
I mean, I cannot say what the government will do, but I don't expect them to break that this time round. I do think that, and I think I said this 3 months ago, that sustained high inflation is a real threat for the whole LGPS, including this scheme, simply because assets will not keep pace with RPI or CPI.
I just wonder, Mr. Chairman, if we will be discussing it is a major effect on the outgoings of this pension fund, inflation rates, particularly over the next couple of years. I just wonder whether that's a discussion item for this committee at all over the next couple of sessions, because it's pretty important.
Okay. We'll take your comments on board, Gordon, but I think just to put that in context, we're just at the start now of the actuarial valuation, 2022 from 2019, and that's where the actuaries will be looking at our long-term liabilities, which includes their assessment and understanding of future inflation, and therefore liabilities, and what our investment returns are looking likely to be from our valuation. So I think that's going on in the background right now, and I think and we will have that in the work programme to visit that and talk to them, and the work is happening as we speak. So yes, it is very important, but we understand that, and there is things going on with reference to it. Yes. Any other questions or comments, please? Okay, so can I move that we'll note William's report, please? Can I have a seconder?
Yeah, I'll second that, Mr. Chairman.
Thank you very much.
Thank you.
So if any further comments, we'll move on to the next item. Thank you. Which is number 7. It's the work programme. So on page 12 of the report is we'll consider whether any amendments or changes are required to the work programme. I'll move the recommendation.
Thank you, Mr. Chairman. I'll second that and reserve my right to speak.
Thank you very much. And I'll invite Tamsin, please, to take us through the work programme.
Thank you, Chair. In the appendix, you can see the work programme for the rest of the committee meetings of the current cycle, pending the dates from September onwards. The committee is asked to identify any additional reports required. Thank you, Chair.
Thank you. Okay, any questions? Oh, sorry, we've moved it, so I'll open it up for questions and comments, please. Anybody have any additions? I think we mentioned a couple of things that we will consider to add if need be in the future. No, I don't see any indications. Oh, Graham?
Now, isn't there a review of the Constitution going on in relation to... There is. Is that in the work programme anyway?
In the autumn, because we've done as we mentioned before, we did all the work for the Constitution, for Cabinet, and all that stuff. That's being done now, yes.
And you do know what our agenda is,
yes,
don't
we
you?
do, yes.
Yes, and you know what his agenda is as well, don't
absolutely.
you? Thank you very much.
Yes, absolutely. Thank you. Right. Yeah, okay. So, there being no further comments, questions, we've moved and seconded it, so I'll have all your votes, please. All those in favour? And that's unanimous. Thank you very, very much. Moving on to item number 8 is the fund valuation and performance. So I'll move the recommendation set out on page 22.
Second that, Mr. Chairman, and reserve my right to speak.
Thank you, and hand over to Tamsin to take us through this very detailed report. Thank you.
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 3 shows the valuation at the end of March, at the end of December, and the value a year ago. The fund investments have decreased by 49.8 million, which is 0.8%, since the previous quarter, as the market responded to the Russian invasion of Ukraine. Within this valuation is 390 million of infrastructure investments, amounting to 5.9% of the fund. 8.7% of the fund is now committed to infrastructure investments, largely due to further commitments made to LGPS Central's infrastructure fund. Paragraph 6 shows a more detailed analysis of the valuations by portfolio, and paragraph 8 shows the unaudited fund account for 21-22 and the full year figures for last year. Paragraphs 9 to 20 relate to the fund's holding in fossil fuel companies and investments in sustainable equities and renewable energy. There are a number of caveats that need to be understood in interpreting this disclosure, which are explained in the report, and I refer members to these. Over time, it is anticipated that fossil fuels will decrease as a proportion of the fund, and that investment in sustainable equity and renewable energy will increase, but this long-term trend will not be smooth. At the end of March, we had an estimated investment of 211 million in fossil fuel companies, which is 3.2% of the fund, and sustainable and renewable energy investments amounting to 486 million, or 7.4% of the fund. Members are reminded, or informed for new members, that a more thorough assessment of our exposure to fossil fuels through our equity investments is provided by LGPS Central's carbon risk analysis, which assesses the carbon intensity and weight in fossil fuel and coal reserves, and was reported to the meeting in November and is reviewed on an annual basis, so there will be an update to that report in the autumn. The core index portfolio section reflects the equity market movements over the last quarter. The Schroders portfolio shows the regional analysis of holdings and purchases and sales during the period. And the LGPS Central portfolio shows capital calls on the private equity funds and the infrastructure fund. Aberdeen have continued to manage our property portfolio with 2 purchases and a sale during the period. The specialist portfolio section shows the composition and valuation of the specialist portfolio and the transactions during the quarter. There were new investments in the Aegon Sustainable Diversified Growth Fund. The section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you, Tamsin. And I think one thing to note is from paragraph 19 was that with the 320 million into the sustainable fund, LGPS actually has happened, and we've got that money invested in now, post the figures at the end of March.
Yes, yeah, that transition happened in the
Thank you. Yeah. Yes, thank you very much. Any questions or comments, please, at this stage? Councillor Waters, Lee.
Thank you, Chairman. I note on page 17 of the pack, or page 3, it's item number 10. Every quarter since March, we've actually increased our exposure to fossil fuel. Partially, this is going to be growth, I appreciate that, but also we've actively chosen to top up those fossil fuel investments with Schroders. I note the increase has been from last year, March 2021, £56 million, so I've read the wrong figure, £135 million. Then in December, we had 155 million in fossil fuel. And at March this year, we had 211 million in fossil fuel. So it's steadily going up. I also note, however, we have actually increased our sustainable and renewables quite significantly, which on the face of it looks like we're doing a great job. So congratulations on that. But I'd like to know a bit more about a breakdown of those sustainables and renewables, as I've said previously, because I can't tell from these figures, are they palm oil? Are they biofuels? Have, for example, farms been cleared of people growing food and wheat to accommodate biofuels in those particular companies we're invested in? So if there's some analysis we could have, that'd be useful to understand. The exposures to fossil fuel and renewable sector is now 10.6%. I'd really like to know, is that a result of portfolio drift? Are we actually going to look at perhaps rebalancing before January, preferably selling down some of those fossil fuel holdings while the market is very high for fossil fuel? I note as well that we had some big company holdings where fossil fuels are not core to their business, and therefore these fossil fuel holdings are almost incognito. And I'm going to give an example and some questions off the back of that. One such company is BHP, a massive mining company. They had one of the biggest reserves of oil, coal, fossil fuels, so they wouldn't feature in that 3.21% holding for fossil fuels. Last year, we had over 2 million direct shares in BHP, on LGPS fund mostly. That was worth over £40 million, and we had been topping it up. You would have seen in the media recently, BHP recently spun out and merged its oil, gas, coal reserves with Woodside Petroleum. They are now rebranded to Woodside Energy, and they're one of the biggest independent pure play oil, gas, coal company that there is listed in globally. As part of that merger, shareholders of BHP would have got 48% of that holding of Woodside Energy. I've crudely done a calculation where I reckon we will therefore hold £8 to £9 million of that company, potentially. So what I'd like to know from the fund manager, how did they actually vote to that merger? How does holding a pure play fossil fuel company fit with the aims of this fund, the sustainability aims? And will the fund sell these holdings as they are a pure play fossil fuel company with little scope for renewables? Thank you, Chairman.
Thank you, Dee. There's a lot of detail in there, and I think in respect of the hidden investments, if you like, in fossil fuels in some companies, it actually also happens the other way. So as part of our fossil fuel holdings, there are companies that also have renewables in their investments that we don't fully reflect in these numbers. I'm not sure of the exact amount because it changes every day. But Tamsin, do you want to just enlarge upon that, please?
I mean, yes, it's absolutely right. A lot of the things you've pulled out are all of the things that I list when I say you need to understand the caveats for this. This is quick and dirty analysis, really, so that we can provide something on a quarterly basis to keep an eye on things. It does mean there are some fossil fuels within non-energy companies which are excluded, but certainly the biofuels that you were mentioning, the companies that invest in those would be classed as energy companies, so they would be within our fossil fuel total, not within our renewable energy total, unless it was specifically identified entirely as a renewable energy company. So there's pluses and minuses in both ways. This is it is what it is, really. It is quick and dirty. It's not. There's no claim for it to be accurate, but those shortcomings are picked up when the detailed annual climate risk analysis is done, and that will look at all of those smaller issues in companies that are not energy companies, and it picks up our exposure to carbon within those companies as part of that risk analysis.
And we'll see more about that later in the year, and we'll see the climate analysis again, I think, Tamsin, for later in the year. So, yeah, is it a quick one, Lee?
Very quick. Just as a follow-up, those three questions I did ask about BHP, I'd appreciate if the fund manager could present back to the committee next meeting just on the answers to those.
Just for clarity and accuracy, would you just email your questions to me, and
Absolutely.
I'll ensure that gets done?
Yeah. Thank you, Chairman.
Thank you. Okay. Councillor Camilleri.
Yes, thank you, Chair. In light of the present energy crisis that we're going through, and also in light of the the way the government now are encouraging exploration of new gas fields, new oil fields, and the fact that the best performing stocks that we have are, at the present time, the energy stocks. Are we sure that we're doing the right thing? We're relying on fuel, gas from abroad, from countries that aren't particularly helpful to us, and the government are looking to be self-sufficient. That's what we're doing. But when we hear all this talk and they're going out there looking for gas, looking for oil, all these companies that we are not supporting, is that the right thing to do? That's just a question.
Okay, so just to say that, yes, we do have fossil fuel investments, and you can see the numbers here, and it's shown that with the problems we've had in the world, the valuation of oils and fossils has gone up, and we've benefited from that in terms of the fund in total. We have got direct, Schroders active investments have fossil fuel investments, so there is some investment in that segment. As for a general thing, if we've got passive investments, we follow the market, we don't follow individual investments. So we will, if the market sees those investments performing well and join the numbers, we will indirectly be invested in them. Is that a reasonable answer, Tamsin?
Yes, I might also add that Schroders, despite investing in these, is underweight compared to the market as a whole, and that is one of the things that has affected their performance over the last quarter.
Yeah. Okay.
Could I just come back on that?
Yeah.
So that in effect,
Microphone, please.
In effect, I'm not taking a position one way, I'm just finding it out. In effect, buyers not investing in that in future, it's now starting to affect our pensioners, perhaps, would it, in the long run? If our investments don't perform, then it's starting to affect everything that we do. And I've always said this, the most important thing this committee has to think about is the pensioners who are now struggling. £100 a tank of petrol, tripling of eating bills, they're more important than the sort of things we're having to do. Okay. Just an observation.
Yeah, can I say that Schroders are holding lower than the benchmark, not for any ethical reasons, because we don't ask them, we don't set them ethical standards to reach as such. We ask them to invest in the best way for the pension fund within certain risk parameters. What they do is they assess the risk of holding certain stocks. And I think it's widely acknowledged that there is risk within holding fossil fuel producers. Over the longer term, the world has got to use less fossil fuels. Most of the big producers are looking at a transition, and Schroders are aiming to invest in those who are going to be best able to manage that transition, and indeed, as you say, to return value in the short term. But they are making those decisions based on investment grounds.
Okay. Any other questions, comments, please? I don't see any. So we've moved the recommendation to note the report, and we'll move on to the next item. Thank you. Which is item number 9, exclusion of the public. So we now move to the part of the agenda that proposes